Hey guys, Hadley here, New Zealand Property Buyers. I wanted to touch today on the 10-year property cycle. So when we look back in time, there's the property market doesn't just go up on a slope. It goes up and then it pulls back and then it goes up and it pulls back. It's a bit like the stock market. It doesn't go in a regular trajectory to the moon. The thing that people forget is what happened the 10 years previous and then what's happening today. And as the saying goes, history doesn't necessarily repeat, it generally tends to rhyme. So it won't do exactly the same thing every 10 years, but it's pretty close to where we expect things to be. And if we look back 2006, 2007, they were the peak times. Then things tapered back and crashed, or not so much crashed, but tapered back in 2008. 13, the recovery came. 16, things took off. Then sort of 2018, I was looking at a valuation report and the valuer said in the report that things were getting way too hot and that the market was about to pull back, which if you looked at all the sentiment at that time was probably about right. The thing that sort of stuffed this cycle up was the fact that COVID came along, cheap money, interest rates went to nearly zero, and then with all the stimulus that was there, people were at home, nothing better to do. And people couldn't go anywhere, so they had to stay in New Zealand. So rental market went ballistic, house prices went ballistic, and it was all pretty artificial. But like every time you go and have a big party, there's a hangover at the other end of it. And the longer that you prolong these, generally the bigger the hangover tends to be. So we got to 2022, market had a pullback, and as I said in previous videos, that we got to a point where Auckland pulled back to nearly 20% of what its peak numbers were. Now, that for someone that bought at the peak has to sell is a big problem. For someone that's there to wait for the next cycle, it's not going to be a problem at all once they wade through things. What we also need to bear in mind too is that we generally need to hold property for a cycle to have the most benefit. When we're in there for a short period of time, we generally tend to be exposed to the volatility of the market. And that if we bought in 2022, needed to sell in 2023, we would have been in a precarious position. But from 2022 to now 2026, the market's picked back up a little bit. It's not back to where it was, but it's showing signs of things are starting to improve again. Inflation's coming back. So when inflation comes back, asset inflation comes back at the same time. Interest rates have come back down again to around the 5% mark, which is pretty normal as well. So we're seeing some form of stabilization there in the market as a whole. Now, the thing with this is that the property cycle is going to happen again, because that's just what happens, and it's happened over time. So we need to remember though that when we're getting into it, that we're buying at a window in time, and that at some point the market's going to take off, and then there's going to be a pullback at the end of it, because once again, that's just what happens. The important thing to do, or if timing the market's something that you think you're doing, the bottom's the place to buy, the top's the place to sell. Now, in a perfect world, that would always happen, but that's not the case at all. And it's really important that when we're looking at things in cycles, is looking at how much demand have we got, how much supply have we got, and then thirdly, when the media's out there screaming that house prices have never been like they are before, you're never going to get a deal like this ever again in your life, house prices are going to the moon, you know you're pretty close to a bit of a pullback and a reduction in price, rather than getting carried away in the hype, like I did the first time I bought a property, and then you end up having yourself in a position where you've paid way too much. Quick wrap up there is that important things to remember, that the cycle happens about every 10 years, sometimes longer, sometimes shorter. If you have a black swan event like COVID and then a huge drop in interest rates, then that's going to affect the market too. As money gets cheaper, prices tend to accelerate quicker. But then the other thing you've got to remember is that even though interest rates are slightly higher at the moment, we've still got inflation, and people use property as a bit of a hedge against inflation as well. So as inflation rises, property prices rise at the same time. It's not solely based on what interest rates are doing.